Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about a comparison between two food giant companies, Nestle and Britannia, FMCG brands that are top class and top notch. Let's understand how they stack up together. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about this comparison, his small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, if you can pay $100, then you get 1 year access by paying for 10 months, so that's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join the YouTube membership and you get all the benefits of Patreon on YouTube. Now, about the industry, the food consumption space has done well over the last few decades and is continuing to do well, especially during the pandemic. The industry has done even better with work from home, people ordering packaged foods online, etc. So, things are looking much brighter as things are normalizing because people are going out and consuming more. Demand for premium products in both segments have increased, so whether it's in chocolates or in cakes and biscuits, etc. Premium biscuits, etc., have gained more momentum than the normal one, and top firms in the industry will continue to do well as brands are taking over the market and larger brands are doing well compared to smaller brands. Plus, organized sectors are getting most of the pie compared to the unorganized sectors. So, as lifestyle changes happen, demand will only surge as we understand that both parents are working. So, most of the tiffins are having Britannia biscuits and Britannia products in them, and Nestle products, chocolates, and so on and so forth in them. So, things are changing extremely quickly and for the better for both these companies. If you look at the comparison, then if you look at Nestle has a greater market cap and margins are much better for Nestle. And look at the ROE for Nestle, it is 106%. The margins, operating profit margin of 24% is quite astonishing. It is regarded as one of the most you can say stable stocks and to hold over years, and this is the reason why, because of its return on equity, because of its margin, currently trading at 21 times sales, which looks expensive but has always remained expensive. In terms of institutional holding, we have around 20% institutions into it and 63% promoter holding, so there's only 16-17% free float. The return on capital employed is 140%. That's a whopping 140%. And it is trading at a PE of 80, 82, 85, which is not ultra expensive considering the other kind of retail and other kind of businesses currently which are trading in that region. In fact, I have an understanding that some mid-cap IT companies are trading at 75, 80 times earnings. So Nestle doesn't look that expensive on a historical basis. Uh, when you look at Britannia, Britannia is having a market cap of around 89,000 crores and an operating profit margin of 15%, which is more relative in nature. Return on equity of around 45% is good, whereas in Nestle we have over 100%, but even 45% for Britannia is pretty strong. Trading at 6 times sales to market cap, but it has struggled over the last 2-3 years to perform. It is because of the cost pressure that is facing with the sugar prices and many other things. Plus, their operational efficiency have gone down over time. There are around 28, 29% institutional holding here. Return on capital employed around 47%. In the case of Britannia, the stock is up 52% in the last 12 months, but has declined over the last few weeks. So, over the last 1 year, the stock has been around 45% up, or so, and 3% movement has been in something like a Nestle. Promoter holding is around 51% in case of something like a Britannia. It is trading at around 50-55 times, which is around the historical averages. So it's not trading ultra expensive, but the numbers are not coming in comparatively, and that is why probably Nestle looks a better pick between the two. But we'll consider all the factors going forward. So if you look at it, both are top-notch companies in their own segments and have been doing well on a say a 5-8 year basis. But valuations are stretched in the whole industry. See, Britannia looks more attractively priced, but if you have Nestle from lower levels, it is much better. So in my consideration, I would say that Nestle, with the kind of performance that it is showing, looks a much better stock to be in terms of stock performance. Britannia has not performed at all over the last 2 years, and the reason for that has been the earnings, which have been virtually flat between 15-20% or something like that, and even come out to be lower than last year in some quarters, so which was surprising. So the performance is not quite coming in case of Britannia, whereas for Nestle, the performance has been quite decent. So if you have Nestle from lower levels, hold on to them, hold on to the stocks. Both should do well as demand surges going forward. And Britannia has had issue of increasing debt, and that is a major concern that they have increased debt over the last 1.5 years. Nestle is a completely debt-free company. Both should do well going forward, but if a company has a debt on its books, then bottom line will get affected finally. So in that case, Nestle looks a better pick. So my call is both are top-notch companies. Nestle, although it is looking expensive, but still looks better. If you get a chance to buy Nestle at around 18,500, 18,300, those are very decent levels to probably get into Nestle. Britannia, one needs to buy in complete distress, probably around 3,000, 2,900. If it goes to 2,800, 2,900, those are the times to buy. Trade into it, sell at 37, 3,800 on an up move. I think based on the increase in debt and whatever has taken place, comparatively Nestle looks good. Oh, but on a singular basis, Britannia is also not bad because the management is top class. Management has done well over the years and should continue to do well. But comparatively, it seems like Nestle could be a better pick at this point of time. Only take small positions at these levels in any stock. On major declines, you can increase position, have less than 10% exposure into such stocks. So this was my video on the comparison between Nestle and Britannia. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.